Okay, finally, I get to do it. Welcome to the weekend video. This is Enda. It's now coming up on 2:30, so the US market is open and nothing much has happened just yet. So I just thought, hey, why not get into it? I'm kind of enjoying doing these videos earlier rather than later because it just does not suit the life schedule to do them late at night, especially when you've got 3 young kids. Um, All right, I'm going to go through the markets. We're going to pick them out. There's a few things that I want to talk about in particular. And apart from that, let's just get going. The main alternate account for euro dollar here, I'm looking at the daily euro dollar count. And I've updated all the long-term charts on tonight's update. And you may have been a little bit frustrated by all the kind of machinations of what's been happening on the website lately. Believe me, it's been a pain in the butt for me too. But I think I'm getting to the end of all these niggles and bugs that have been ongoing, and it's all stemmed from European regulators. Like all the best things in the world comes from a regulator, and my own problems as well. I've done some things that I've kind of taken on too much this week, so it took a lot of chewing to get through it. So I think from now on, hopefully the workload is kind of reducing. I think we'll get things back to normal, and I think I'll be able to roll out the new um, pricing scheme, and hopefully the new pricing software, or the payment software will work without a glitch, and hopefully all will go swimmingly. And that's not going to happen, but we live in hope. Okay, that's technicalities out of the way. Here is euro dollar daily count. This B wave here high happened right the February 18, and that February 18 high completed in 5 waves after a 3-wave correction, which started way back in um, uh, March 16, March 15, sorry, March 15. So that was a 3-year long sideways move. Um, so it was an expanded flat. It's pretty typical expanded flat. Wave A up, wave B down, and 1, 2, 3, 4, 5, wave C. I'm calling that 3-wave move all of wave B, and now we should be moving down in wave C. How do we get there? That's the whole ongoing issue from here. It's been a reasonable, very respectable, let's say, decline off the high. But it's unclear what is happening here in this kind of real drift into nowhere since November last year. So almost a year of just drifting sideways. A little bit of downside bias there, but it's more or less sideways. We can pretty much agree on that. It's stable, and the market doesn't usually do things stably, in my mind anyway. You can see off the wave B high here, we've got kind of a 1, 2, 3 triangle, 4, and a 5 down into what I'm calling wave 1. 3 waves up in, which could be a wave 2, but also this this long drawn out drift into nowhere could be all part of wave 2 still. And that's showing as part of the alternate account here. You could also say that this was wave 1, 2, 3, 4, and then an ending diagonal at wave 5 into the lows that we're currently experiencing. So that'll be wave 4, 1, 2, 3, 4, 5. There's nothing beautiful or let's say well formed about that wave count, but it's still nonetheless relevant enough. The downside has kind of picked up momentum recently. You can see here after this kind of hiatus where the market went to sleep, the downside has kind of taken hold again. So this could be a lower degree one, and wave 2 that we're working on, which is what I've shown here in the short-term chart. So you've got that wave 2 high and move down into wave 1 and A, B, C up into wave 2, some sort of expanded flat correction here. But the daily chart also shows this alternate count wave 2, which could rally back up into about 118.25. 118, that's the previous kind of significant retracement high here. And that'd be about a 50% retracement also of this move down. So we're kind of betwixt and between what we're going to do here. So let's get down into the 4-hour chart here and see what has gone on. That's the current wave 2 high. Seems to be a kind of a wedge pattern, wave C in 5 waves to complete wave 2. That's reasonable. Off that high, we've got a wave 1, 2, 3, A, B, C, 4, and 5. There is also another way of reading that. I'm just not going to bother going into. Suffice to say, I think there is another leg up in on the cards here for wave 2. Would expect a run up to 111.09. That'd be this previous spike high here. This after 3 waves up, 3 waves down, and then a 5 wave up into this 111 area. And this correction could also head up to 112.50. That'd be the previous interim spike high. So, or you call it a pivot point if you want. Let's get down into the hourly chart and see what's going on. When you get into the hourly chart, it's a little bit more palatable, let's say. If we guess, it's A, B, and C. So we've got 3 waves up in A. We've got A, a kind of triangle, maybe wave B, and then 1, 2, 3, 4, and 5 down into this wave C. And we seem to be hitting some sort of reasonable support here at 109. So, what do we expect next week? Well, if this is a 3-3-5 pattern, I would expect a rally up in 5 waves to minimum of 111.09, possibly 112.50. And that you see that 112.50 there is that previous high there. If that's the case, then next week should be an up week for euro dollar with the minimum target 111.09. If we do get by the end of today, maybe we'll see a higher low, 5 waves up, 3 waves down. Most likely not. Probably by early Monday, if not Monday afternoon, we'll get 1 and 2 closed out. So Monday evening might offer a little opportunity here to ride wave C if wave C is going to be what we get. Okay, so that's euro dollar. Possible 5-wave rally on the cards for next week. Okay, so cable. It's a little bit nicer of a wave count. We have a pretty reasonable 5-wave move down into the most recent lows. We've got a double bottom there and we've got a rally off that. So I am viewing this as wave 2. Excuse me. Wave 2 possibly complete. And that high is 125.80 or so. We were expecting a rally into that triangle there, and that's pretty much what we've got. And we've got a nice decline off that level too. So we could have a 1-2 pattern complete here. And someone's ringing me. I should turn off my phone, shouldn't I? But. Okay. So we have a wave 2 high, possibly in place, and we've got a nice impulsive move off that high. So let's get into the hourly chart and kind of pull that apart. I am reasonably confident that this should continue lower into a 5-wave pattern. If not, I have there's always an alternate ready to go. But if this decline only traces out a 3-wave pattern, well then we should prepare for a larger leg up in wave 2 here. But for the moment, we've hit the target and we're moving lower again, so it's reasonable to suggest that we will complete 5 waves down in wave 1 and then possibly a lower high then in wave 2 somewhere around the 124 level by next week, or by probably early next week. Depending on how the session goes today, I think we've got wave 3 done and we're moving hopefully just sideways in wave 4 before pushing lower again into wave 5. So the outlook for next week would be to complete a possible bearish signal off that high. I'll just go to the 4-hour chart and show you my idea for another way of looking at this. So if we don't get 5 waves down, we could end up moving to a possible A, B, C pattern in wave 2. So that'll be a larger second wave. We'll deal with that on Monday if it comes, or Tuesday. So for now, let's see if we can build a bearish signal off this high for a move down into a third wave. We'll see how that works out. Okay. Here is a 4-hour dollar yen. We're moving reasonably according to plan. And it looks like that we've got wave A up complete and we're working on wave B now. I think there's another leg to come in wave B, so we complete some sort of 3-wave, possibly a flat correction wave B, and then move higher again into wave C. So overall, we're working on this large triangle, still working on this large triangle. And we're expecting, I'm expecting another leg up in wave C. So that'll be 3 waves up in D, and then we'd work on 3 waves down in E before rallying kind of longer term. I suspect that would be at least the end of this year, if not early next year, before this sideways pattern completes. Okay, the hourly chart. You can see that the market continued higher overnight. So wave B seems to be taking on, well, it's probably pushing up the schedule a little bit. We have wave A complete. We have an A, B, C down in A, B, and a C. So 3 waves down in A, done. We're working on 3 waves up in B, with wave C now unfolding. So we've got wave C of B, and this wave C, if you can track me, should trace out 1, 2, 3, 4, 5. We'll probably hit that resistance about 108.50 maybe on Monday before heading lower again into the larger wave C. So you can see that we've got an A, B, C pattern on the cards here for this sideways correction. So next week we should top out, roll over again, and head down into wave C, and we'll just chew on every day as it comes, because this correction is just going to probably just continually cause headaches as every B wave does. Okay, so let's move on to the stock market. The alternate account is obviously still on the cards, but I still favor, in my mind, I'm still hell-bent on getting out of this top and back down into a bear market, but that's just me. I think we still have a valid 5 waves down and an ABC pattern up in wave 2. So 5 waves down, 3 waves up. The alternate account, the alternate account is, everybody watching this video is now yawning. Into the future as well. Whoever watches this video in the future will start yawning at whatever 15 minutes in. Okay, so the alternate account views this whole sideways pattern since May this year as an A, B, C, D, and E kind of contraction triangle with an ongoing 5-wave pattern up in wave 5. So do we top out now? Do we top out later? Oh, your guess is as good as mine. I still like the fact that we have a kind of this head and shoulders kind of cresting high in place, and the long-term momentum seems to be heading bearish in a big way. So we've got daily momentum here topping out a series of two lower highs above the extreme high in momentum wave was that back in February and early March. So a topping pattern within a larger topping pattern. That about does it in my mind. The longer term charts suggest longer term decline ahead. The short term charts just have not kind of bent to that will just yet. So I'm still leaving the door open for this bearish pattern to unfold, maybe next week. We continually get these, promising moves to the downside, spike after spike to the downside, and corrective moves to the upside. So I'm still not ruling out the fact that we could be tracing out one after the other of impulse patterns at lower and lower degrees. If we get an acceleration lower and a break of 26,700, or even better again, 26,400, I think that would be enough for us to move into fully bearish mode, and watch for 5 waves down and then 3 waves up in wave 2. So once we have, if this does pan out and we do get 5 waves down and 3 waves up, well, then at that point we'd be in severe kind of alarm territory, because we could easily see another crash scenario in October if this works out. The alternate count obviously will be triggered, I think, if we get a push back above, let's say 27,200 or so. So we'll keep an eye out for that. Okay, let's move on to gold. The 4-hour chart. Possibly complete wave 4. We've got new lows today, so this recent decline has so far traced out 3 waves. I wasn't so sure about yesterday's low, but we've got a new low today. So with that in mind, I would like to see this current decline complete above 1483. We're very close to that level now. If it breaks 1483, then wave 4 is probably tracing out some sort of a combination wave, and we'll finish wave 4 soon enough anyway. If the triangle is to hold, we have to hold above 1483 today and then move higher. I think if we get a rally back above 1512 again, that'll probably indicate a wave 1 up is complete. On the longer term, I am expecting a rally in wave 5 to begin pretty soon, and it should be an extended rally, I think. If we go by the daily chart, I think I'm probably even a little bit conservative about where I think wave 5 of 3 could go. So I think we could even push above 1790 or 1800 if we do get an extension. So we'll have to watch out for that. Well, the job right now is to call an end to this 4th wave correction, and then work on a bullish signal off the wave 4 low. Okay, so let's see if the triangle holds today. Even if it doesn't, we should be close to the end of wave 4 now, and we should probably look for upside, I think, next week, beginning early next week. Okay, let's get into crude oil. This is a 4-hour chart. We have a nice 3-wave pattern complete in wave 2, so an A, B, C, and we are pushing lower again. So it's what I'm working on here is wave 1 of 3, so we'll just watch out. We are probably very close to that right now, so I think we'll probably see early next week. We'll probably see some sort of corrective lower high again below this wave 2 high. So let's get into, it'll be wave 1, 2, and then wave 1 and 2 in to begin wave 3. The hourly chart here, you can see I've got wave 1 marked low, or the wave 1 low marked. The price spiked to a new low this morning. I'm not sure, we'll just have to play it by ear day by day, but I'm not sure whether this is a wave 3 low, as in here, or if wave 3 is complete as shown. It seems to be a kind of a minor triangle. That could be wave 4, and then we're moving down into wave 5 today. This will obviously reveal itself eventually, but we'll just have to hold fire, I think, at the moment, because it's hard to know. You know, in general, I would like to see prices push lower and break that wave B low there, that 52.70 level, before wave 1 is complete. You know, that would kind of bring the size of the internal moves here into kind of equality with the size of the moves that you would expect off that high. So, well, makes sense in my mind. I'm sorry if I'm confusing you. But suffice to say, I think we're close to completing 5 waves down. We've got wave 1, 2, wave 3, maybe wave 4 and 5 now underway. We have to nail that down early next week. But I think we will get, once we do find a low in wave 1, we'll move up in wave 2 again. And we've got these previous highs and pivot points here to kind of rally back into. We've got 2 previous fourth waves there. So yeah, back up to about 57 again to complete wave 2 and then head down into wave 3. So we'll see how that works out, obviously. But so far so good. But I would like to see wave 1 complete at a lower level to break one of these support levels at least, before we start looking higher in wave 2. Okay, S&P again. There's nothing much that I can say to elaborate on stocks that I haven't said in the Dow, because I do have a similar view for the broader market as I do for the Dow. So as you can see there, we've had ever since, let's say, what was that, early September, so the first week in September, 5th to the 6th, we had a high in both RSI and MACD, and price kept pushing higher and, well, flattening out, while momentum kept creating lower highs, and with that kind of divergence was an immediate bearish signal. So we've moved off that high. It's yet to develop into a 5-wave pattern lower, and I would like to see that happen. Alternate count is the same here for the S&P as it is for the Dow, so there's no real point going into that. But today, I would really, like to see a sell-off today, if not today, early Monday, in order to kind of solidify this bearish outlook. But the larger signs are in place, and hence the reason on the short term I'm looking for a short-term sign to kind of complement that. So a signal on the short-term charts to kind of back up what's happened or what's already in place on the long-term charts, and already in place in the wave count, and already in place in, long-term momentum, long-term, market internals. It's all there. The signals are flashing red for the last 6 months easily. What we need is a short-term signal to back that up. Okay, we could have one off the high. That's what wave 1 and 2, but I'd like to see a lower degree one before moving down into a third wave, and that would seal the deal really. So next week, just leaving the door open for this bearish pattern to develop, and we'll see if that does or not. We'll get into silver. Here is silver. We've got that larger 3-wave pattern underway. We have actually broke through a new low below wave A today, so it looks to me like wave C is drawing to a close now, and that should complete. a fourth wave. Now, here is just a spanner in the works for you if you want one. This fourth wave, I may be selling myself short by calling this, by labeling it at the degree that I've labeled it. I mean, I could go a degree lower and allow for a higher high to develop in wave 3 there. So it could be 1, 2, 3, 4, 5 for wave 3. So I'm kind of toying with that in my mind. The reason being, the scale of the recent decline, or so let's say the size of the recent rally needs to match the scale of the recent decline at the degree that I'm working with. So we've had a nice rally. I'm not sure whether this wave 3 is complete just yet. We are, at the moment, we're tracing out a fourth wave. Whether it is wave 4 green or wave 4 blue has yet to be decided. So if it's wave 4 blue, I think longer term we're even more bullish. So here you can see the short-term chart. So I could show this as an alternate here. Insert shapes. And I show alternate counts with a red circle around it. So, just buyer beware. We have fallen again out of that fourth wave. I don't think it developed into a triangle at the end. It seems that we had some sort of flat or running flat, maybe wave 4, and then a 1, 2, 3, 4, and now we're down into wave 5 of 5. Sorry, wave 5 of C. Wave C here has now broken the low of wave A, so that's the minimum target for 1738. We'll see how the price reacts. Let's say to the support level here. It's 1693. So between now and 1693, I'd like to see this this wave C complete, and then next week we'll be looking higher again into wave 1 of 5. Whichever degree that fifth wave will be is yet to be decided, but the next move up should be wave 1. Excuse me, wave 1 of 5 anyway. Okay, so we'll go to the bond market, and we have a nice 5 waves down, 3 waves up, complete in the bond market. The only caveat with this is, will this second wave develop into a larger corrective move? So we could see a larger 3-wave pattern develop off that 5 waves down. We'll see how that plays out next week. But for the moment, we have 5 waves down, 3 waves up into that 130.78 high, and we're moving lower again in general off that high. Next week, I would like to see that 130.78 wave 2 high hold. Whether we get the larger wave 2 or not is yet to be decided. But we have 3 waves up, and we should start moving lower in 5 waves down. And that completes the video for the week. Thanks so much for being with me. Again, forgive the glitches that have happened over the last few days, or the last week, let's say, and I'm hoping this will all be smoothed out next week, with a good rollout of the new pricing strategy and the new website software and all that. This is all stuff that you don't need to know, but I feel like I just have to vent it to somebody. So have a great weekend. Be good. Don't do anything I wouldn't do, and God bless. We'll see you Monday. Bye-bye, everybody.